There's a moment most people don't talk about. It's after the business sells, after the inheritance clears, or after the market runs up your portfolio and finally pushes you past 5 million. And then suddenly it hits you. This is real now. You can't afford to make a mistake. You're not trying to beat the market anymore. You're trying to protect your legacy, your lifestyle, your peace of mind without second guessing every move. So what do you actually do? Do you invest it all? Do you take some risk off the table? Do you spend it? Do you gift it? Do you shelter it from taxes? Because at this level, making bad decisions, it just hurts more. And the consequences are bigger. My name is Chris McClure, and I've been helping successful families and business owners answer questions just like these over the last 30 years. And here's what most financial advisors won't tell you. The strategies that got you to 5 million are completely different than the strategies that will take to protect 5 million. Because the difference between a $5 million plan that works and one that silently fails usually comes down to three things. Let me tell you about Brian and Elena. They hit that $5 million milestone after selling real estate. They'd held that real estate for a long time, and the sale went better than expected. They were debt-free, their kids were grown, and their grandkids were on the way. But instead of feeling like they wanted to celebrate, they felt paralyzed. Their old advisor told them, just stay the course. A friend told them, buy more real estate, right? A CPA warned them about future taxes, but didn't give them a plan. So they were stuck between fear and friction, and they didn't want to guess their way through retirement. So here's a system that we built for them, and it had 3 steps. The first is we focused on taxes. With $5 million, you're really planning for a 30-year tax war. Required minimum distributions alone could push you into the highest tax brackets potentially, maybe even causing over $200,000 a year at age 73. For Brian and Elena, we created what I call tax diversification. We used 3 different buckets: a tax-deferred bucket that had their 401k, a tax-free bucket that had their Roth conversions, and then a taxable bucket that had all of their brokerage accounts and real estate. You see, most people think Roth conversions, they don't make sense at high income levels. But with $5 million, the math actually flips. 2 years of $150,000 Roth conversions, while their income was low, could theoretically save them over $500,000 in lifetime taxes. The second was sequence protection. And this is where plans they quietly fall apart. With $5 million, a bad market year isn't an inconvenience, it's really a threat. If you retire and the market drops 30% in 1 year, you're not just losing value, you're actually spending down a shrinking account. You see, that combination can cut 10 or 15 years off your portfolio's life. So we set up what I call a bond ladder buffer. We put $400,000 in short-term bonds, and that covered 2 full years of income, so that their stocks and the long-term investments that they owned had time to recover if there was ever any problems in the market. And they actually never had to sell at the bottom. And the third step was we provided income clarity. We actually mapped out every dollar that they had for a purpose. They knew what covered their lifestyle, what fueled long-term growth, and then also what protected their family for their legacy. And for the first time, they stopped second-guessing every financial decision. Well, the result was their lifetime tax bill dropped by $680,000. Their retirement became more resilient to the ups and downs in the market, and they could finally relax and enjoy what they built. And this is where people get tripped up, right? If you invested like you did when you had $1 million, if you spend like the money will last forever, or you ignore taxes until April, you're going to potentially burn through wealth faster than you think. I've seen people spend $200,000 a year thinking they were being conservative until inflation and taxes caught up. I've seen portfolios down 18% because no one adjusted the risk once income was being pulled. So that's why a good plan isn't just about what you own, it's about how and when and why you use your money. Because you don't need 12 different investment accounts, you don't need 3 different advisors. What you need is clarity. You need clarity on what supports your income, what fuels your growth, and what protects your family, and lastly, what keeps the IRS out of your pocket. If you've crossed into that $5 million zone or you're close and you don't feel totally clear on the plan, that's usually a sign it's time to zoom out and get a second opinion. And so we work with a small number of families each year who want something more than just cookie cutter advice. If that's you, please feel free to schedule a 20-minute wealth strategy call with our team. We'll walk through your current setup, your goals, and what opportunities you might be missing. It's not a sales pitch. It's really just a chance to see if your strategy is really working as well as it could be. You'll see at the bottom, there's a link in the description. The calendar fills up quickly, but we always leave a few slots open each week for conversations just like this. Because when you've built real wealth, you don't want to wing it. So I hope you enjoyed this video. I really do enjoy making these, and please like or subscribe, and I'll see you on the next video.